Hey, everybody. Welcome back to the Live with Madeleine, Katie, and Dale, your monthly live show powered by the Simplify Senior Transitions podcast. If you're joining us here for the first time, this is now a monthly show. This is where we unpack the real life challenges families face around senior care, housing, and financial planning, and give you practical, honest answers you could actually use. Whether you're navigating care for a loved one, trying to protect your family's legacy, or just want to understand your options before a crisis hits, you're in the right place. Throughout the show, we'll be answering live questions as I'm able to see them. And you can get your questions in by scanning the QR code that you see on the screen, or you could head to simplifyseniortransitions.com/live. The same form will show up there. You could ask a question anonymously, and who knows, your question might just make it on the air. For those of you that don't know me, I'm Dale Corpus, your host and senior transition specialist, real estate expert based here in the San Francisco Bay Area. I've been in residential mortgage and real estate since 2001. And I also hold my RCB administrator's license. So yes, I help families sell homes, but more importantly, I help them fund care, avoid costly mistakes, and plan for long-term success. I work with families in the sandwich generation every day, which are folks that are juggling our parents' needs, our aging parents' needs, while raising our own kids. And that's why I created this show, to give you clarity, confidence, and a place to ask the tough questions. And today's topic is something a lot of people have never heard of before, but it can be a total game changer when it comes to planning for care. Topic for today is refinancing your retirement using life insurance. We're going to talk about how you can take an outdated life insurance policy and use something called a 1035 exchange to upgrade it for modern benefits, including long-term care coverage, tax-free withdrawals, or even funding retirement income. And as always, I'm joined by my two amazing experts, Katie, who is our go-to for all things life insurance and care funding strategy, and Madeleine, who brings the personal lens and care perspective to everything we talk about. So let's do a quick round of intros. I already did mine. Katie Perez, do you want to kick us off?
Absolutely. Hello, everybody, and welcome to our second live podcast. Time flies so fast when you're having fun. It's the second now. It's a few months since we've conceptualized this platform, and we appreciate your support. My name is Katie Perez. I have been a mortgage loan officer for the last 25 years, and up until recently, I've expanded my services to complete the full financial professional service that I felt my clients in the mortgage world moved it. And later on, I realized that it's not just my clients from the mortgage world, but everyone around me. It's interesting and concerning to know how much or how little people know about their financial needs to have a better and more stable financial future. So here I am together with.
Hi, everybody. Welcome back. Welcome back. Madeleine Fortage reporting live from Scottsdale, Arizona, where it's a nice balmy 88 degrees. And I'm sure you guys are enjoying your weather over there. But I come from the background of real estate. I don't want to say how many years because that's a little embarrassing. But also, I'm a life agent, just like Katie. And actually, we all are in the same sphere of real estate and caring about how we can help others be educated about making good choices and decisions. And keyword, please, planning. I'm all about it.
Welcome to the Simplify Senior Transitions podcast, where we help families navigate senior living, real estate, and everything in between. Hosted by Senior Transition Specialist Dale Corpus, this show brings you expert insights, real solutions, and stress-free strategies to make senior transitions simple. Ready to dive in? Let's go.
So, Dale, why don't you kick it off with the questions that we have today?
Okay, here's the first question. My parents bought a life insurance policy 20 years ago now. Can we do anything with it now? Who's got that?
I'll start with that. So the policy has been around for 20 years. The question to ask is, do you know what it covers?
Okay.
Chances are, if that policy stayed in the drawer for the last 20 years, your parents might have forgotten the details of what that policy covers. So we recently celebrated Life Insurance Awareness Month. where I've been encouraging everyone, pull out those policies, pull out your estate plan, take a look at it, review it, make sure it's still relevant, make sure it's still sufficient to cover your anticipated needs. And if anything, at least you have a fresh reminder of just what that policy covers for you and your parents in this situation. Madeline, have any comment on that?
I do. I actually think that parents having policies, again, some people think set it and forget it. I don't know who that wild, crazy guy was on the late night TV shows, but set it and forget it. That's not what we're talking about here for life insurance. Do not set and forget. It is actually look at it. I know people laugh about this story, but my parents hate the fact that the seasons are coming up. And what do I ask for Thanksgiving and Christmas? It's annual review time for living trusts, policies. And it's because those are the times, those are the seasons when we're around family and friends, loved ones, sphere of influence, where we remember that there may be some individuals that aren't there celebrating with us. It's a good time to take inventory and stock before the new year comes around.
Okay. Thank you for that. And next question. What is a 1035 exchange and why haven't I heard of it?
Well, 1035 exchange, if I was to give a light example, the 1031 exchange for real estate is a more popular and more heard of offering. And I think because we liken it to the game of Monopoly, we're trading something for something else. We're moving pieces on a board. A lot of times we're moving it in a 1031 exchange because we're trying to get something better. That is the same concept with a 1035, except for we're using insurance policies. What we're looking at is the cash value in these insurance policies. Typically, it's a permanent policy, and we look at the accumulated value and see if there is a purpose for us to utilize those funds and give the person a new policy. Now, remember, I said this in the previous meetup that we had, that as insurance agents, we cannot just churn business. That is not what we're here for. We have to do something that is beneficial to the individual that is being insured. So that's when we utilize 1035. And again, there are instances where we don't use a 1035 exchange. And that would be if somebody wants to keep a policy and they want to keep that for a specific function and reason. And then we have the ability to do what is called layering policies, where we put policies to cover gaps that they may have. That's your 1035. It's an exchange.
Okay. Katie, do you have anything to add on to that?
I think the reason why people don't hear about the 1035 exchange as much as the 1031 exchange is concerned is oftentimes people don't know what they have in their previous policies or in their current policies, for that matter.
Okay.
Right. And a lot of policies, especially if it's a long and an aged policy, some of those might not have cash value. So again, it goes back to reviewing what you have. When you're having a conversation with your trusted professional, make sure that it's disclosed that you do have a policy, because they might be able to review it for you, take a look at it, see if there is cash value that has accumulated that might be used for something better, something more relevant. So again, take a look at what you have, review it.
Okay. Speaking of policies, what makes these newer policies better?
I love to compare life insurance to our phone devices. Our telephones have gone through so much evolution over the years, right? I mean, I'm going to be aging myself when I talked about the home phone used to be something connected by a cord to the wall. And if you want to have a private conversation, you better hope that's a long cord so that you can take it into your bedroom and close the door. Nowadays, our phones are so portable. And we don't just use it to make phone calls. In fact, we use it for everything else but to make a phone call these days, right? So it's the same thing with life insurance. The life insurance industry realized that people's lifestyles have changed. We're living longer. Because we are living longer, there's the concern of outliving our retirement funds. There's a concern about our health. And because of that, and even the family dynamics have changed. Families don't necessarily live in the same area anymore because we're so mobile. At least what the life insurance industry has done is to acknowledge those changes, improve on their products. So if we're talking about concern about their outliving their retirement funds, life insurance nowadays have the ability to accumulate cash value to address the health situations. Life insurance now have living benefits that can address needs like terminal illness, chronic illness, critical illness, or the need for long-term care. These are what we call your accelerated death benefit riders. Life insurance has provided that as well. That's the difference between the more current and newer life insurance policies.
Okay. Madeleine, anything to add?
And again, we're not saying that we replace all of them, and sometimes we keep them for specific purposes. But like Katie said, it is evolution. And again, when we're talking about evolution, we're looking at possibly providing better level of protections that may not have been available previously. I can speak to it for my own self that I had my policies when I was 18. Those policies are not the same product today. And again, we're talking about those riders that potentially could give you better offerings, better levels of protection for the living benefits that weren't an offering even 5 years ago. There's such an evolution and things changed. And especially after the pandemic, I think there's a lot of surprising things. One of them being they can even increase the eligibility ages for certain policies. But Katie and I work with various providers where every single day there's something new to learn. It evolves. The products evolve, and so do the companies. We always say, let's take a look at it, have an open mind, and let us see what we can do to help.
Okay. I actually have a live question that came in. Here's the question. What's the difference between a hybrid policy and a traditional long-term care policy? What's the difference between a hybrid policy and a traditional long-term care policy?
Well, I can address that for you or for our listener. The traditional long-term care policy it was created years ago and was introduced to the market and specifically to address long-term care in the U.S. Most of the time it's in the U.S. It had a lot of limitations. If you don't use it for long-term care, that whole product is what we in the industry would call a use it or lose it policy. Now, the hybrid policy, a little bit more flexibility, again, because our lifestyles changed. Doesn't mean just because you get older that you need to use, that you're going to need long-term care. Because by definition of long-term care has nothing to do with age, has nothing to do with medical condition. Long-term care is simply the inability to do 2 out of 6 activities of daily living for more than 90 days. Doesn't mean because you get older that that's going to happen to you. So the hybrid long-term care or the hybrid life insurance gives you the option to have a cash accumulation value, a surrender value, or a long-term care value. So it's what we call live, die, or quit solution. So that's the main difference between the traditional long-term care and a hybrid life insurance long-term care.
Excellent. Madeleine, do you have anything to add to that?
That covers the majority of the differences between long-term care and hybrid. But these are those things where I will say planning comes into play. Sometimes we don't plan ahead and we think about it as something far off into the distance that we'll never need. So planning and taking a look at snapshots where this might come into play. Because if you could tell me when I was going to get into a car accident 2 years ago, I would have loved to have had that crystal ball with the information. And all I could think about in the back of my mind was at least I had policies that had riders that would serve me as a person, and not just because you die, because that's always what people, death benefit is always a thing that sticks to people's mind is you got to die insurance, right? But what if you suffer something massive and life-changing, life-altering, and it impacts you adversely? Sometimes, as much as I love to plan, the morbid statement is sometimes the worst part is surviving something and then trying to figure your way out of that scenario. So, and if you didn't have the planning ahead, the forethought, sometimes that's where people get impacted. And then we're in that scramble mode, which I'm sure all three of us have experienced in some way, some shape, some form, some family member, some friend, where there was a deficit in their planning that it impacted them adversely. And we all hate to see them make the harder decisions, which is sometimes liquidating an entire estate and taking tax implications and impact on top of making decisions with what they have left to look at long-term care options.
Okay.
And Dale,
planning.
I wanted to add something to that in taking into consideration our topic of refinancing and retirement.
Yeah.
We use annuities as part of our retirement plans. It's what allows us to create our own pension plan. Right? I don't know if a lot of people are aware of it, and I'd be surprised if they do, but annuities now also offer retirement benefits or retirement riders that includes something very similar to a long-term care. It's what they call the ADL. It's commonly called the ADL benefit. And the reason why they call it ADL is to qualify to avail of that rider or that benefit, the individual has to be unable to do 2 out of 6 activities of daily living for 90 days. It's the same qualifying criteria as a long-term care. Now, choosing one over the other, there's considerations that we need to make. And when we take a look at an individual's retirement plan, we have to take into consideration that there's 3 basic things that people need to have in their retirement plan, which is equity, liquidity, and trust. We take a look at the whole picture and try to figure out where do they have their funds and what tool can we use to address those needs, those retirement needs that individuals will have. And again, that's why it is so important to have a conversation with your trusted advisor and be aware of what it is you have.
Yeah.
Great.
That's something that's very helpful. Being that the title of my podcast is Simplify Senior Transitions, why is talking about all this, life insurance, this 1035 exchange, why is knowing about all of this important for adult children, helping a loved one transition, into assisted living full-time, or even maybe having an in-home caregiver full-time or even part-time?
Because when the need arises, I, by experience, have realized that you need to have in your full attention and understanding what the circumstances are. And if you're trying to grasp the concept of what your loved one is going through, while also trying to figure out the solution on how to bridge that or how to take care of that new financial burden, because there is, it does entail a financial responsibility. It's a load for your loved one to deal with. If you want to spare your loved one from having to deal with that or having to try to figure out how do I make my career adjustments? Do I quit? Do I take a different job? Do I go down a different career path? Or consider how do I split my time between taking care of my parents and raising my family? That's a lot of responsibilities for an individual to have. When we're talking about these things, I like to think that we're doing people a service by planting the seed and letting them aware that there's all these things that they need to be prepared for, not because we're scaring people, but we just want them to be aware, because if there's time to prepare and plan, like what Madeleine's such a big advocate for cover planning, right? Then take the steps while you still have the luxury of time. Don't learn about it at that very moment, so that you're not having to make rushed decisions that could have financial and legal consequences.
Yeah,
absolutely. I don't know if I've shared that. That's actually how I became life agent licensed. The impact was to my parents.
Mm-hmm.
And anyone who knows me knows that, who needs children when you have parents like mine? I love them to death. I joke around about it, but it's true. There's a learning curve. There was a learning curve to, I remember sitting for the exam and thinking, this Medicare thing is they expect humans to understand this.
Yeah.
I can understand it barely. And in that, knowing that, like Katie said, there's There's things that we would love to say, this is the ideal situation. This is going to happen XYZ, right? And then there's this thing called duress, right? When you're under pressure in a pressure cooker trying to make good decisions. All I thought to myself was, my parents immigrated to this country and here they are put in this position where they could retire and take these packages, and here's the life insurance and here's Medicare, and how do you get insurance if you don't have health insurance when you're not old enough to get Medicare? Like all of these things that Madeleine in her mind thought, oh, I'm never going to have to do things. And look where I am today. This is a very popular conversation. And the reason why is because you don't want to make, who wants to be responsible for a rushed decision and then a tax impact and implication after the fact? I surely don't. I always say, try to educate as best as you can. That's what we're here for, is the education value, like a real conversation as to how these things actually play out. Because as much as I love to plan, tell you what, I'm planned, and then somehow, some way, it just goes off the rails. And then you're in that response, reactionary flood of emotions and cortisol trying to make good decisions for your loved ones. And in my case, my parents, who have a license, but doesn't mean they listen. So there's that too.
There's that too.
There's that too.
We're all smiling with that statement because somehow I think
I think that resonates with everybody.
Their famous statement is, we're grown adults. And I said, you read through this stuff, Ben, and tell me what you learned from it. Literally, the binder was handed over. It's like, no, you know what? You read it and let us know what you think. And I thought to myself, this is a thesis of information. And when you don't have time to advocate and then and try to make best comprehension of what you just digested, because every scenario again is different for every single person, it's a lot of mental payload to know that you could potentially make a mistake that causes a tax implication. And there's nothing worse.
What's next?
Another question. Is there a deadline or age limit for doing this? As in looking into life insurance policies, looking into long-term care policies?
There's no deadline. Let's put it that way.
Okay.
However, the youngest age that you can get long-term care or a long-term care writer with a life insurance policy is 18 years old.
Okay.
Now, the thing with long-term care or life insurance in general is that it's not a question of affordability.
Okay.
It's a question of eligibility. And unfortunately, as we get older, we're more susceptible to having health concerns. And that could work to our disadvantage when we're looking to get a life insurance. Life insurance or long-term care insurance or long-term care writer, that all comes into play. There's no deadline per se, but I think the sooner you look into it, the better it is for you.
Okay. Madeleine?
I agree with that statement. Again, back to my favorite thing, planning. Having those conversations, they're tough conversations to have. I think the one statement that's always resonated with me is, you're only as healthy as you are today.
Yeah.
Because unless you have a crystal ball or a magic 8 ball, I'll take that too. Magic 8 ball that tells me what's going on tomorrow, then I would choose to be as healthy as I am today and try to move that forward, because you really don't have the luxury per se, because anything can happen, especially this crazy world that we're living in these days.
Yeah. I'm going to move on. Our next segment is fact or fiction. Are you guys ready for that?
Yeah. Let's go.
All right. Let's go through these. All right. Fact or fiction. You can't touch life insurance unless someone dies.
Big time fiction. I guess in this podcast episode, I've mentioned several times that life insurance as a product has evolved. Life insurance as an industry has evolved. And there's now such a thing as living benefits. Life insurance now has the ability to accumulate cash value, have living benefits that would allow you to accelerate the death benefits. So when we're still living, you can benefit from that policy.
Okay. Fact or fiction. You'll lose money if you exchange your old policy.
Fiction, 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 fiction. I think that that's a misnomer. A lot of people think that anytime you're removing things that there's loss that can be experienced.
Mhm.
When we do a 1035 and we're rolling over a policy, there is a lot of quality control that goes through that process. So the
Mhm.
previous carrier and the new carrier, and we match up all the numbers and we make sure everything is as it should be before we roll it so that there is no loss of value there. Katie?
Another thing that I wanted to add there is life insurance and annuities are often identified together
Okay.
because it's all part of a life insurance field. And when I hear people talk about, oh, you're leaving money on the table, that's not necessarily the case. So if we're talking about annuities, that's getting confused as a life insurance, and that happens, right? What
Right.
people need to understand is there's mainly two kinds of annuities out there. There's the accumulation type and there's the income type. The what we call the premium bonuses that might be available to both and the interest accumulated. It varies very much how it's treated depending on what kind of annuity it is. So
Mhm.
when people make a statement that, oh, you're leaving money on the table, I would ask them to find out what kind of annuity did you sign up for? Is it supposed to be an income that will provide you lifetime income where you're trying to create your own pension plan? Or were you using it to accumulate funds and build up your retirement for the future?
Yep.
So that's the distinction that people need to make. And again, the only reason why I'm bringing up annuities while we're having conversations about life insurance is because it's closely related. Those two products are closely related. So, and people often associate one with the other. And so that's why I wanted to bring that.
Okay. Next one, fact or fiction. You have to be rich to afford hybrid life and long-term care insurance.
Fiction, fiction. And speaking to that, I mean, I think one of the common misconceptions there is that people always associate it with cost. Like, what does it
Mhm.
cost for us to get? And really, the mindset should be turned around. And maybe the thought is, what is the benefit that we get for placing our funds in this vehicle? What are we gaining from it? Because if we're looking at it from a cost, everything has a cost.
Right.
Doesn't matter what it is. Does it always have a benefit? Not really. I mean, some things really don't. And when you're making these considerations, when you're talking to your trusted advisor, the thing is, realize that if they're a fiduciary individual, this is the type of position they put themselves in. They are trying to do the best case scenario. Always remember that that's the starting point. That's
Mhm.
the part where they're investigating what they can do to help serve you, hopefully. And basically, that cost, that is based on what that individual wants.
Yeah.
And you can have 30 healthy male non-smoking individuals. You could have 10 of them. And the cost and the values for each of those 10 individuals will be vastly different. Just know it's a starting point. It's a conversation. These things can always be evaluated. It's not just a one conversation, one and done situation. Over time, these things evolve and the conversation deepens. And sometimes situations, life impact happens even in the middle of those conversations that make us change the direction of the conversation. But it's always based and led by what that individual needs. And it's an individual. Unless
Yeah.
you're a husband and wife, then that's one individual too, though. Just kidding around. But seriously, you should have those conversations together. Maybe, maybe not. But it just depends. Those things are important to have.
Okay. Moving on. Fact or fiction. If your policy is more than 15 years old, it's probably obsolete.
Okay. This requires a little bit more of explanation because it could be fact if you have a term policy. A
Okay.
term policy, as the name suggests, is tied to a period in time. That's why it's a term. It could be 10, 15, 20, 25, 30 years. What that means is your policy will cover you for that period of time. So there's a question of outliving your life insurance. But you'll ask, well,
Right.
why would somebody get to that kind of policy? Most of the time, because it's affordable. And the second consideration there is, what is it being used for? So if you have a mortgage, let's say, for example, and, especially for us, Dale, in the Bay Area, we know that you need two sources of income to be able to purchase a home here, right? Sometimes more than two sources of income.
Right.
So can you imagine what would happen to the surviving spouse if somebody predeceases, once predeceases? That's a big financial burden to the surviving spouse. So you get a term policy.
Right.
The most common is 30 years because your mortgage typically is 30 years, right? Why is it affordable? Because most of the time people outlive their life insurance, and as an industry, less than 2% of the issued term policies gets paid. So that's why it's affordable. Now, if their policy is a permanent policy, which is the ones that we advocate for when it comes to planning for your retirement, planning for your future, there's no expiration date on those. Now, there's the question of whether it's still relevant, but that doesn't mean that the policy lapses. It's a permanent just because it's 15 years.
Yeah.
So, Madeleine, what's your point on that one?
Good points. All good points, Katie. I do have policies that are crunchy old, if that's what we're going to describe them as. Yes, I got them when I was 18. And if you look at it again, they're still active. And when they, you look back at it at 18, you're like, man, $100 is a lot of money.
Yeah.
And you look at it now, and $100 is like $1, maybe $5 if you're lucky.
That's not even dinner.
And it's not
Sometimes
a lot.
I fill up your car with a full tank of gas with that.
Definitely not in California.
That's a big ouch, Dale.
Yeah.
That is an ouch. You know what? Just for you, I'm going to post a photo of what
No.
gasoline looks like. But to be fair, again, talking about replacing something, sometimes it makes sense to keep something that is an older policy for the sheer sake that you have that additional coverage. Because does the $100 hurt now? Maybe there's a benefit to that. And if you have that conversation with your trusted advisor, they can have that option there as to why you would keep it versus why you wouldn't. And again, that's all just the beauty of having options when you plan.
Okay. Got it. As you wrap up, I want to check. Anybody have any final words on anything?
Madeleine, why don't you start?
Final words. I think there are two things that I'd like to touch a point on. One is planning, because I'm a big advocate of it. And then the other thing that I didn't mention at all, or Katie touched on a little bit, is function.
Yeah, Katie. Yeah, on Madeleine's side, her feed is stopped. Katie, do you have any words on your side?
Yes, I do. We have these conversations again because we want to help our community and have a good understanding. And in light of that, November is Long-Term Care Awareness Month. So take a look and see if you've planned appropriately in the event that you might lose long-term care in the future. So just a reminder. Again, Dale, I'm so glad that we're able to do something like this. I'm so glad that we're able to do this service to our community. So I'm glad that we're able to do this together.
Well, it's a monthly thing. We'll be on back next month. So everybody, that's a wrap on this month's episode of Live with Madeleine, Katie, and Dale. Thank you so much for spending part of your day with us. Whether you're watching live or catching the replay, we're truly grateful to be part of your journey through senior care, family planning, and all the complex decisions in between. A big shout out to my incredible co-hosts, Katie and Madeleine, and of course to everyone who submitted questions today. We got some fantastic ones, and if we didn't get to yours, don't worry. We may kick off the next month's show with it, or I might feature it on my daily questions of the day series powered by the Simplify Senior Transitions podcast, which you could find if you follow me on LinkedIn, Instagram, or even TikTok. So for the next episode, if you want to get in a question in early, scan the QR code on the screen or go to simplifyseniortransitions.com/live. You can submit a question there anonymously and be part of a future episode. And don't forget, you can find even more deep dives and expert interviews on the Simplify Senior Transitions podcast. It's available on YouTube, Spotify, Apple Podcasts, or wherever else you listen. And if your loved one is facing a senior transition, whether it's figuring out how to pay for care, understanding your long-term care insurance options, or deciding whether to sell or refinance the family home, schedule a free consultation and learn more about my services at www.simplifyseniortransitions.com. We're here to have you make informed, empowered decisions with compassion and clarity. Thanks again for tuning in to Live with Madeleine, Katie, and Dale. We'll see you next month, same time, same place. And until then, take care and remember, you don't have to figure this all out alone. Thanks, everyone.